We continue to look at the movers here on Wall Street. Jenny Horne, host of Next Gen Investing, is with me. And of course, we continue to look at all the big names in focus. We'll start with Novo Nordisk. That one, a new CEO and down 20%.
Yeah, and the story here really is, Nicole, that we're seeing the company reducing its expectations on the wild popular drugs like Ozempic as well as Wegovy. Shares slumping as much as 20% in reaction this morning. There was, as you mentioned. So on top of the fact that we had already seen some reduced price activity in this name, down about 20% even prior to this move on the year. But at constant exchange rates, Novo did say that its 2025 sales will grow between 8 and 14%. Prior expectations were around 13 to 21%, and its operating profit will rise between around 10 and 16% versus the prior range of around 16 to 24%. So because of the weak dollar, sales and operating profit growth reported in kroner terms, of course, in the Danish currency, will be at a 4 to 7 percentage points lower than at constant exchange rates. And for the full second quarter, those results are still due on August 6th. So they did say the persistent use of compounded GLP-1s as well as slower than expected market expansion and competition really were to blame. Novo has sued really Hims and Hers over what they said was illegal mass compounding over knockoff Wegovy. They said they're deeply concerned that without aggressive intervention by federal and state regulators and law enforcement, that patients will continue to be exposed to these significant risks that are posed by these knockoff semaglutide drugs that are made with illicit or inauthentic foreign active pharmaceutical ingredients. They also did say even through insurers, Novo Nordisk is facing competition from Eli Lilly's line of various competing medications as well as slower market expansion. On Ozempic, it's diabetes injectable that also does help, of course, to reduce weight. They said competition was hurting it there specifically. Outside of the U.S., they reported lower than expected penetration as well for Wegovy in key markets, again, due to this slower expansion and competition. So various headwinds weighing on their expected now growth for the remainder of this year. Pretty sizable reaction to that. And this is the nature of what happens when so much of what's propped this stock up in spite of the overall healthcare volatility over the last several years has been their dominance in the GLP-1 space. And so unfortunately now facing some backlash when that market share is really just being eroded by competition and unfortunately some Novo Nordisk specific missteps.
Yeah, and you know what's interesting? I mean, all of these drug names have not done particularly well. We're not seeing this group really soaring. The GLP-1 story with Hims and Hers, it seemed like it was going, and then it was so, vague. As you noted, they were doing composites. It wasn't authentic. They said they thought they could do both, sell Wegovy and have their composite. That was a fail. So Novo, this big move here, 21% is no joke as you have a change in the C-suite and Eli Lilly's down. I mean, it's just a tough group.
It is a tough group, but I also think it does illustrate, unfortunately, the lack of affordability that still a lot of these drugs do command. I mean, we talked a lot about when they first really came to market and came to that rising popularity, the way various CEOs like Walmart CEO, PepsiCo CEO were saying, hey, we're going to see a mass impact because of this. But also, on the other hand, there's a lack of affordability with Ozempic, especially still retails in the U.S. for over $1,000 a month. So all that to be said, the mass market appeal, I think, is lacking given the fact that you cannot sell this to the masses with the price tag that these various drugs do still command. Now, of course, that is for weight loss use. These are much more covered when using for diabetes or various health-related concerns, but there's still a huge gap, I think, in affordability, and that's where unfortunately, or maybe fortunately for us, but the Hims and Hers, these more affordable compounded drugs are really seeing that dominance as far as their growth in this market.
Understood. Let's get to SoFi. Now, SoFi has an up arrow this morning, in fact, rallying after its quarterly report. What's the good news there?
So, I mean, a company that continues to impress, frankly, and this goes to show that a high bar can always be exceeded as shares jumped as much as 10% this morning after the company did boost its 2025 guidance by a hefty margin following the stronger than expected second quarter results as their loan originations climbed more than 64%. So they now expect their 2025 GAAP earnings to fall around 31 cents a share versus prior consensus was around 28 cents a share. Adjusted revenue is expected to be around $3.37 billion. That was also ahead of consensus. And adjusted EBITDA guidance was also raised to $960 versus the $911 million previously forecasted. So the spotlight was really on the 72% year-over-year surge in fee-based revenue, which now makes up 44% of their overall revenue, which I think is the most clear evidence that it's shifting from being a lender to this platform-first business, as well as this structural shift has really unlocked the margin scalability and helped to de-risk its overall model. So, I mean, second quarter earnings did easily top expectations, also climbed from a year ago. Adjusted revenue also did beat forecasts pretty easily, as well as mark some substantial growth. They did see their adjusted net revenue growth of 44% year over year, which is the highest level they've seen in over 2 years, driven by record new members, as well as new products and an increase in this fee-based revenue. So all things considered, I mean, the origination volume was, again, surging 64%. Personal loan originations jumped 66%, and student loans did increase about 35%. I mean, just healthy growth really across the board for this company that has shown now with its number of members rising to 11.7 million that they are growing at a pretty nice clip. And I think that overall, you could say for a lot of these fintech or financial exposed stocks, the results have been far and wide better than feared. And a nice 10% move to follow shows I think the street's very pleased here.
So surging loan growth, the CEO very positive, saying things can only get better from here. I mean, almost like it's bad. And meanwhile, it's been good news, and you're seeing this stock. I mean, I just pulled up a 3-year chart. It was at $4 a while back. It's at 22 plus, 23 plus this morning. So an incredible run with this loan growth and number of records and such. I mean, this would be a blockbuster, right? I mean,
yeah, even earlier this year, trading at $6 a share. And it feels remarkable that we've been able to weather like the entirety of the storm that has been facing a lot of the consumers, and not even necessarily from what we've seen from results, but there was this broad fear that the consumer was stressed, the consumer would not be more frugal with their purchases and spending. But obviously, the consumer is also looking for a place to perhaps, grow some of its savings and accumulate further interest. And SoFi seemingly is resonating with a lot of these consumers because, yeah, we've risen 250% from just 52-week lows, while also remaining off of those highs by about 7.5%. But we'll have to see if we can obviously open closer to those levels here, as this name has now been so resilient in spite of all of the concern that has weighed on the overall market. I mean, up 34.5% this year, and really showing signs of a more mature SoFi that has more consistency and reliability for its earnings moves.
Okay, great to see you. Jenny Horne, thank you. Good luck there at Novo Nordisk and also SoFi this morning.